Hello everybody, welcome once again to the weekly wrap-up. The currency markets, forexlivetoday.com, free website packed with news and analysis. Check it out. Today's date, Saturday 15th of October 2011. Hope you had a great week. For me, it was a very mixed week. Why? Well, this week saw the continuation of this relief rally, and some of the positions which I was hopeful about didn't really materialize as I had hoped that they would. What do I mean by this? Let's have a look. Okay, the first thing I want to show you is the Australian dollar, actually. Aussie US. Alright, so if you can see here, a really long-term view. We've had a really strong bull run that was in line with equity markets and the Australian dollar being such high interest rates. So up it went for 18 months until finally things have started to unravel recently. And with the sovereign debt crisis in Europe, we've had this really sharp sell-off. So all the way from $1.10. It bottomed out down here at 93 cents. This was in line with equity markets. Panic had gripped the markets. The US dollar was soaring. People were flying to safety. Things were not looking good. Nothing fundamentally has changed since that point. The only thing we've had really is, Sarkozy and Merkel out of Europe coming out saying, we're going to find a resolution to this crisis. We don't have any details for you, but believe us, we will find the resolution. And since then, we've had continuing countries, sovereign, we've had banks downgraded. But in the face of this, for the past 2 weeks, the markets have rallied really strongly. You can see here the trade that perhaps I was looking for this week. We have a dominant bearish trend. We have really strong resistance meeting at parity, psychological level of parity, two really strong resistance points. You would think after a break to the downside, a retest, continuation of a dominant trend, it's the correct trade to take. Anyway, let's zoom in a little bit and see what happened. So you can see it retraced, it touched our meeting of the 2 points right around parity there. It did fall away a little bit, it did come off, and then look what happened. It immediately reversed and the bull run continued, and continued extraordinarily strongly. This is an instance where cutting your losses and immediately reversing into the trade would pay off handsomely. This is where we get into psychology of a trader. Now, to be a market commentator or a political market journalist, a financial journalist, an analyst, you can wax lyrical, you can go on and on about these fundamentals. What are the fundamentals? Well, we know all about the sovereign debt crisis. We know that the downgrades that are happening, earnings season has begun. It's been mixed at best. This rally is on, really weak volumes. Everything is pointing towards weakness in the markets. What do we see in the markets? We see massive strength. This is the difference between an analyst and a trader. If a trader has conviction that the markets are going to drop and you trade but purely on that conviction, you're dead. Look at this. Your margin is gone. Traders, we need to look. We need to see what the market is telling us. Put it next to our fundamental analysis and our convictions, and then trade accordingly. Therefore, what are we seeing? We're seeing a bull run. Overall, what am I? I'm overall bearish in these markets. However, am I going to be shorting these markets at the moment? No. Am I taking medium to long-term positions to the downside? No. You have to be nimble. You have to adapt to market dynamics. Otherwise, as a trader, you are better off as an analyst. All right, let's take a look at the S&P 500. You can see once again, here is from the bottom of the range to the top of the range. What do we do now? Do we just open our short position? Aggressive traders probably are. Me, I want to see what happens on Monday. A bit of a breakout, a false break, and a drop back into this range. Then I will be adding short. If it just continues long, I'll be staying well clear. We must trade what we see. Euro dollar, same thing. The bull run has continued all week. I have been actively trading euro dollar all week this week. However, am I taking long-term positions? No. Medium-term positions? No. I've been trading the 1 minute, 5 minute, 15-minute chart, 30-minute chart, things like that. Where are we now? We're above the low of July. We're running into some resistance up here, but it's still up at 140 there, and we're at 138.70. So a continuation up to 140 before any halt in this run is a distinct possibility. Pound dollar, the cable. I've added a few lines in here for you, significant points. 153, bottom of the range. This is a year, over a year that this has held the bottom of this range. So the fact that it held, in hindsight, is not a huge surprise. At the time, when panic and fear was everywhere, it looked as if it would go, especially when it broke to the downside. But it has since recovered. Running into some resistance here, just like the euro dollar. So, just best to wait and see. If you see false break and then a move back down, then is your opportunity to short. If you see a break and continuation, stay out. If you see a break and a false break and drop back down, time to short. The reason I'm more interested in shorting these markets is because the overall trend is down. The fundamentals have no positivity or optimism in them really at all. Until we see some details out of these politicians, until we see some actual resolutions. Sure, these countries are starting to announce austerity measures. Let's see them implement them. Let's see them actually make cuts to these deficits. So for me, the fundamentals are bearish. The overall trend is bearish. I'm only going to be taking long trades in very short time frames with tight stops. Dollar yen. Okay, this has been a trade that I've been talking about for weeks. Dollar yen is a different story because it doesn't play so much to the risk. You've got two safe haven currencies which play different roles. We have the US liquidity currency, we have the yen, which is a funding currency. We've got this range here now between 76.50 and 77.50. You'll remember I moved it up, the base, up from 76.30 up to 76.50. And this week we only got one trade out of it. You can see this candle here. So we took our 40 pips, but there was the opportunity for more. Again, this is a rounded bottom pattern. We have broken out of this downtrend. I think the opportunity here is to the upside. However, you want to see confirmation. You can see the breakout. It's broken out and immediately retraced back. So watch it closely, but there will be opportunity. Just be patient. In the meantime, if you want to trade it, just take these short-term trades off this base here. Dollar Swiss. Now, this is one I mentioned last week as well, and I mentioned that I just got out of my long, which was fortuitous really, because this week was considerably bearish for dollar Swiss. However, you can see how it's come back and it's at this support here. Now, anyone who is short, unfortunately for me, I was not. I failed to take it. However, you can see that the predominant trend here is up. So that's why I'm much more interested in long positions. So a bounce on Monday from this level and a continuation of the dominant trend to the upside is something that I will be very interested in. So there's some pending trades here on euro and cable, medium-term trades. I want to see them turn back down, or I really want to see some conviction in the bull run before I change my overall bias. And we have dollar yen on the short-term trades and dollar CAD a bounce from this level to the upside. That's what I'll be playing early into next week, and that's what I'll be looking for. How long can this relief rally last? If you've seen any of the futures volumes, you'll know that there's really no impetus, no conviction in this move. The credit default swaps, the 10-year Treasury notes, the government bond yields, none of these are telling me that this market is healthy and we can expect strength. So until some of those fundamentals start to change and the overriding trend changes back to bullish, our overall stance here is bearish. But that doesn't mean that we will not be trading long in the meantime, just on shorter time frames with tighter stops. Good luck. Hope you make some money. See you next week.